Hi everyone! Can installment sales for a real property be interest only? So that's the question for our today's video. So let's talk about it for a real property such as land, building, or a home. Talk about financing. So you probably heard of installment sales. It's a popular financing option that allows for payments over time. But have you ever wondered if these installment sales can be interest only? So let's go look at this question together. So first, let's understand that an interest only installment sale for real estate, what it is, right? Unlike traditional installment sale where payments cover both principal and interest, an interest only installment sale has a unique structure. In this arrangement, the buyer initially paid only the interest accrued on the outstanding balance of a specific period. So this period typically ranges from 1 to 10 years normally, but it could be different rules depending on your state and how you want to structure it, right? So now you might be wondering about the specifics of this structure when it's interest only. So during the interest-only period, the buyer makes monthly payments covering only the interest portion of the loan. So this leads to lower monthly payments, which can be quite appealing for a buyer, especially those with temporary financial constraints or expecting an increase in income. However, it's important to note that after the interest-only period ends, the buyer will be required to make a larger payment. So these payments will include both the principal and interest, often referred to as balloon payment. So the advantage of interest-only installment sales, there are some advantages, right? So first off, the lower initial payment offer buyer more financial flexibilities, allowing them to manage their cash flow more effectively. Additionally, the flexibility provided by interest-only installment sales can be a significant advantage. It offers buyers more room to maneuver their finances to adapt to changing circumstances and plan for the future. So, while interest-only installment sales have their perks, they also come with risks that buyers should be aware of. So one significant risk is the balloon payment due at the end of the interest-only period. Buyers need to be prepared for this larger payment or consider a refinancing option. So during the installment sales, if they can get another loan to pay off the original seller, then it might be a possible situation that they could refinance in that to pay off the original seller. Another aspect to consider is the higher total cost over the life of the loan. So usually, since the buyer is only paying the interest for an extended period, they might end up paying more in total interest compared to a fully amortized loan. So the IRS guideline on interest-only installment sales. While the IRS doesn't prohibit interest-only installment sales for a real property, there are specific rules and guidelines that you need to follow. So first thing is proper documentation is very important. The sale contract should clearly outline the interest rate, the duration of the interest-only period, and the term of any balloon payments. The IRS also has imputed interest rules. If the interest rate changes is below the applicable federal rate set by the IRS, the seller might have to report imputed interest income based on this. So key consideration. So recognizing gain is another factor to consider. In an installment sale, the seller doesn't recognize the full gain immediately, but they recognize it as payments are received. So this timing can be affected by an interest-only period followed by a balloon payment. So for the seller, basically, if you think about it, right, the whole point of using the installment sale, the main point is to defer capital gain tax. As opposed to just selling it outright, right? So either that you take like a big chunk of, get hit of the capital gains in the first year when you sell the property, when you don't have an installment sale, so you sell it outright, so you take the full hit the year of the sale. Or the regular installment sale, when you get a portion of the principal and the interest every year, so you spread it out, cut out somewhat evenly, or depending on the terms that you set with your buyer. So you spread it out over the year. Or in this interest only plus the balloon payment, so basically you pay really little tax because it's only tax on the interest, right? That's spread out many years, and then you get hit at the end. So if you anticipate that your tax situation, your tax rate gonna be a lot lower during that balloon payment period, then it might be beneficial, right? A lot lower than now. So it might be beneficial to do it that way. So it really depends on your tax situation. Additionally, if the seller engaged in frequent real estate transaction with financing, the IRS might classify them as a dealer. This may also cause tax implications. So definitely talk to a professional about your state laws to make sure that meet all the criteria necessary for your specific situation. In conclusion, to wrap up, so interest-only installment sale for real estate offer advantages like lower initial payment and greater flexibility. However, they come with risks that you need to carefully consider, both for the buyer and the seller. So when diving into interest-only installment sale agreement, weighing the pros and cons, so consult with your financial and legal professional and ensure both parties understand all the terms. Crucial. So by taking these steps, the buyers and the sellers can make informed decisions that align with their individual needs and circumstances. So thank you for joining me in exploring this topic today. If you have questions, put it in the Q&A, and I see you at the next video. Bye!